All right, it's time now for our stock of the hour, a closer look at Southwest. The shares right now having their worst day since 2009. The airline earlier announced plans to cut capacity, halt most of its hiring, and review its spending plans. Now, some of this may be tied to some of the issues going on with Boeing and, well, the lack of airline deliveries, but there are bigger issues out there as well. Abigail Doolittle joining us right now to talk a little bit more about what's really driving this down. And Abigail, I mean, at first blush, you would think, okay, some of the issues with Boeing and the fact they're not going to get the planes that they were supposed to get delivered would certainly have a material impact. But when you go through the numbers that they're laying out here, this seems like it goes a lot deeper than just airplane deliveries.
Yeah, much deeper. And it's interesting because the stock down so much since 2009, as you were saying, I was thinking this really doesn't match the idea that it has something to do with the Boeing not delivering as many planes as was expected. So this has to do with them basically cutting revenue. They've cut their revenue guide for the current quarter. One look at it is the RASM, so it's revenue per seat mile flown. They're now looking at flat to up 2% versus the guide they gave just a month ago of up 2% to 4.5%. So the ranges are completely different. This really tells us that over the last month, fares have come down. They've had too many planes in the air. They're talking about it from the standpoint of lower than expected close-in leisure passenger volume. So that's basically within 21 days of the trip. They're not seeing as many people. The couple trips I've taken where I've done it days before apparently hasn't, well, I actually haven't flown Southwest, but I do like to travel that way. But apparently a lot of other people right now relative to Southwest are not. Now, relative to capacity for this quarter, it's going to increase 11%. The prior plan had been for up 10%. But if you think about that, more capacity is not good for them right now because it creates the same problem where there's going to be less revenue. So in a way, if we back into Boeing, if they do only get the 46 planes versus the 79 planes that they had gotten the year before, it could help them because they are going to have to cut capacity. So that's over the long term, it could be. It's
well, except that the new planes that are going to come on are so much more fuel efficient that it actually saves them money in the long run because they won't have to pay for the fuel in the same way. Now, what's interesting is that there was a J.P. Morgan Sector Airline conference, right, today. Are other airliners, particularly either the discount or the big guys, echoing something similar to what Southwest is saying?
Not really. It's interesting. It seems that Southwest is its own airline relative to what it's talking about.
Alaska, it's its own airline.
It is definitely its own airline. I've not been on it in years. Why? Have you had an experience?
No, just back in the day, Southwest, Spirit,
Yeah, exactly. I flew a lot of it. Not anymore. Well, right now at least. But Alaska Airlines, they're the surprise winner, an upbeat outlook. Their loss, the guidance for the loss was less than half of what was expected. So that's really a better guide there. American Airlines, their bottom line for the second quarter, talking about what you're saying about fuel, increased considerably. So the look for EPS was a little bit light there. And then Delta just holding.